If you are 65 or older and you believe your money is safe in the bank or your 401k retirement fund, then this video is the most urgent warning you need to hear this year. We are living in an era where the old rules are dead. U.S. national debt has passed the point of no return, and when a government cannot repay its debt, they have two choices. One is to default, the other is to print money to let inflation wash it all away. And guess what? They are choosing the second option, to pick your pockets every single day without you even realizing it. In the next 20 minutes, I will expose the truth about the banking system, the so-called deposit insurance, and most importantly, I will show you the only emergency exit to protect your family's legacy before the real financial storm hits. Do not take your eyes off the screen, because these truths will never be broadcast on television. Ladies and gentlemen, let me start with a simple question. Do you remember back in the 1970s or 80s what a $100 bill could buy? It could buy a full cart of groceries or even fill up your gas tank for an entire month. Now, when you walk into a supermarket with that same $100, it vanishes like a breeze, leaving you with only a few trinkets. It's not because goods are getting more expensive. A loaf of bread still requires the same amount of flour. A liter of milk still takes the same effort from a farmer. The value of the goods hasn't changed. It is the money in your pocket that is dying. And the primary culprit is that staggering $34 trillion in national debt hanging over the shoulders of the U.S. government. Let me explain this number in the simplest way possible. If you spent $1 million every single day from the birth of Jesus until today, you still wouldn't have spent $1 trillion. Yet, America owes 34 times that amount. What's terrifying is that the national debt has now exceeded 120% of the gross domestic product, GDP. In 5,000 years of economic history, no nation, I repeat, no nation, has ever been able to pay off a debt this massive with real money. When debt gets too high, governments have only two options. One, declare default, which would cause the entire world to collapse instantly. Two, print more money to pay the debt. And which path do you think they are taking? They chose the second. They print money. The Federal Reserve prints money to buy government bonds. The government uses that money to spend and to pay interest on old debts. Currently, the interest the U.S. pays to its creditors is higher than its entire defense budget. Imagine that. Paying more for debt interest than for the most powerful military in the world. It is mathematical madness. When they print trillions of dollars and pump them into the economy, what happens to your savings? The law of supply and demand is simple. The more there is of something, the cheaper it becomes. When paper money floods the market, its value drops. That is inflation. Inflation is not an accidental occurrence. Inflation is a policy. It is a hidden tax that doesn't require an act of Congress. Every time the Federal Reserve prints another $1 billion, they are silently stealing a portion of the purchasing power in your savings account, your 401k, and your Social Security checks. They tell you inflation is only 2% or 3%. But look at your electricity bills, your health insurance, and your grocery receipts. Everything is rising 10%, 15%, even 20% a year. If you are living on a fixed income or a pension, you are getting poorer every day, even if you don't waste a single penny. This is the brutal truth no one wants to tell seniors. The current financial system is designed to punish savers and reward debtors. You, the people who worked hard your whole life, saved every cent, and put it in the bank hoping for a peaceful retirement, are the biggest victims. But the story doesn't end there. If you think your money is at least still there in the bank, that the numbers remain the same, then beware. The U.S. banking system is sitting on a ticking time bomb even more dangerous than inflation. Recall the collapse of Silicon Valley Bank in early 2023. In just 48 hours, the 16th largest bank in America collapsed. Why? Because they used customer deposits to buy government bonds, considered the safest asset in the world. But when the Federal Reserve raised interest rates to fight inflation, The value of those bonds plummeted. Banks today are holding hundreds of billions of dollars in unrealized losses. On paper, they look fine, but if everyone rushed to withdraw their money at once, banks would be forced to sell assets at a loss and collapse immediately. And do you really trust the FDIC insurance? That fund has less than 1% of the total deposits in the US. If a systemic crisis occurs, if 5 or 10 major banks collapse together, that insurance money will evaporate like a drop of water in the desert. And there is one more thing, a legal clause few know about called a bail-in. After the 2008 crisis, the laws changed. Instead of using taxpayer money to bail out banks, banks now have the right to use the depositor's money, your money, to recapitalize and stay afloat if they are in danger. Legally, your deposit is considered an unsecured loan to the bank. When a bank goes bankrupt, you become the last creditor to be paid. So, ladies and gentlemen, the big question is, what must we do? When paper money is losing value, when banks are no longer a safe haven, and when the stock market is dancing on the peak of a debt volcano. The answer does not lie in complex new financial instruments. The answer lies in the past. It lies in what our ancestors trusted for thousands of years, real assets. Look at the wealthiest people in the world, and more importantly, look at the central banks themselves. While they advise the public to keep paper money and save in banks, they are quietly buying gold at the highest rate in 55 years. Why are China, Russia, India, and even European countries hoarding gold in their national reserves? Because they know a truth they won't tell you. When the monetary system collapses, when the dollar loses its dominance, gold is the only thing left standing. Gold is not an investment for quick profit. Gold is insurance. Gold is God's money. It cannot be printed out of thin air like paper money. It cannot be erased by a government decree. And most importantly, it does not depend on anyone else's promise to pay a debt. For retirees, protecting what you have is far more important than chasing risky gains. You don't have time to start over if you lose everything. Therefore, the most sincere advice from history is to diversify your portfolio. Don't put all your eggs in one basket, especially not a basket named paper money and virtual assets. Consider converting a portion of your retirement fund and savings into physical gold and silver. I'm not talking about paper gold certificates that you can't hold. I'm talking about gold coins and silver bars that you can keep in a family safe or in private secure storage outside the banking system. That is truly your asset. If the banks close tomorrow, you still have that asset. If the internet goes down, you can still use it to trade for food and safety. Alongside precious metals, pay attention to real estate, land, and tangible things. But be careful with debt leverage. In today's high-interest rate environment, debt is the #1 enemy of the retiree. Try to pay off your mortgages if possible. True financial freedom is when you owe no one anything. Ladies and gentlemen, I know this sounds frightening. No one wants to believe that the system we've trusted our whole lives is shaking, but the truth is often uncomfortable. And my responsibility is to tell that truth so you can prepare. The greatest wealth transfer in history is underway. Smart money is fleeing paper assets to find real value. You have a choice. Either stand still and watch your assets be eroded daily by inflation and national debt, or act now to build a solid financial fortress for yourself and your children.
Don't wait until the TV announces a crisis to run to the bank. By then, it will be too late. Review your investment portfolio today. Ask yourself, if the dollar loses another 20% of its value tomorrow, what will my life look like? Thank you for listening to these heartfelt words. This is financial survival knowledge that I believe every senior deserves to know. If you found this information helpful, please share it with friends and loved ones who are also worried about their retirement funds. And don't forget, in the next video, I will expose a threat even greater than inflation: central bank digital currencies, or CBDCs. I will show you how they will control every penny you spend. Stay healthy and protect your wealth. Goodbye. and see you next time.